Not in the scene like last time. I don't want it to be in the scene. Yeah. Okay. A bit in the scene this time. Yeah. Fuck it. Move monitor a bit closer to me. You will be switching the scenes, yeah? Remember, like we agreed, more often switches, less screens, more talk for the shorts. We're ready.
What's up, guys? Welcome back to another episode of Ark Quant Crypto. This is the podcast where we get into what quant trading is all about, how these algorithms work, how these bots are moving, so we can give you the best information, so that way you can make the best decision on how to get into the market. What do we got now? I think last time we were talking about the crypto seasons, alt season, and Ethereum season, Bitcoin season, right? Based on what's happened, where are we at now? What do you think?
Hi everyone, thanks for joining us. Happy to see Ziggy back. We missed you, Ziggy. We had to do one with you without you because it's fun to be in that market. It's evolving fast, and whatever we talked about last time is already outdated.
Yeah, exactly.
It's like it's part of being in trading in general and in crypto in particular that it evolves so fast. The news does, like as everything, I guess. The news doesn't stay for too long, and then last time we were worrying about and partying about getting the rate decrease, and now today actually we're worrying about the government shutdown. So the party is kind of
always
over,
something.
and the war escalation also, like all those
Yeah.
war talks also escalating. So a lot of different factors influencing the market. We had a pretty deep correction. I mean, comparatively deep, nothing crazy, but we had some movement down. Last week it was, I believe, on Thursday. Yeah, I guess Thursday was the worst day. When was it? Thursday last week, and then we had a podcast on Friday discussing that at the end of the day, I mean, nothing major, like normal correction. It seemed to be pretty fierce, but it normalized over the weekend and actually rebound. So the market seemed to be not reacting too much to the to the to the government shutdown news. So it's been played. This card been played out too many times. So the market is kind of like underreacting. But that's a dangerous science, because then if something unexpected happens, then the overreaction might happen. So I guess I don't know. Like most likely, from what I haven't actually looked at the news today, but like from what I understand, it's not expected to change, so most likely we are going to go into the shutdown, and I guess 15 to 20 day shutdown is kind of priced into the current price.
That's fucking crazy for there to be a whole government shutdown for 15 to 20 days. Like,
I mean, I've been looking into it a bit. Like there was like some like, since it's coming into the play, I was listening to some analysis on that. I mean, it is crazy. It's not normal. Like it's not a normal thing at all. Like even though we try not to get political in this crypto and quant trading related show, sometimes it's hard to stay out of it because it determines the price action.
Yeah, exactly. That's crazy.
And that's something that's not really built into the quant models. That's something that like have to be basically manually integrated.
You have to either just turn it off, probably,
One way, or build around predictions. I mean, usually, like I was looking at some data yesterday, usually the markets actually grow after it's anywhere from 10 to 20% in 3 months after the government shutdown. If it lasts like normal type of days, like if it lasts anywhere like between 15, 20, 30 days, like it usually lasts. Usually the three following months, and in like sometimes actually the market performs pretty strong in the shutdown.
Wow.
There is no real explanation, I guess. I couldn't I can't find off the top of my head the real explanation for that type of price action.
That's crazy.
But I guess it's so like built in already and so risk off.
So
The
this has
risk
happened enough times. And for people-
21 times.
Damn.
21 times over the last like whatever, like I think they told
I-
100 years or something.
That's
Like
crazy.
it started around
That's
like Great
crazy.
Recession.
So this is a regular fucking thing at this point. If that's the case, 100
But
years.
this time, Trump is like, we have to take into consideration Trump, and Trump is trying to play it like, from what I heard yesterday from the analysts, Trump is trying to play it a bit different, because before they were just basically letting federal employees go home. So there is basically like two or three categories. Like there is like essential workers who must stay. Like for example, the guards in the prisons, they must stay. They can't go home. Like someone have to do it. The doctors, like that type. Like some of them are completely essential. TSA at in the
This
airport.
fucking summer break.
But it's not really, because like they don't get paid. Like it's not
No,
a paid
okay,
one. Like
okay,
no
yeah.
one is getting paid. They basically, the way like it works, it basically they don't get paid. Like sometimes a month, sometimes 50 days.
What is it supposed to happen?
Tonight at 12, if they don't reach an agreement. But it doesn't look like, because basically they're not negotiating. Like there is no negotiations today going on. They basically, both sides of the table said that there is nothing to negotiate about, and they're just going to drive it into shutdown.
The
And Trump is trying to
fuck?
actually use it as an opportunity
course.
to continue doing what they started with Elon
The
Musk, to
crypto shit?
continue cutting the employers. No, to
Oh,
continue,
oh,
because they
oh,
sent
yeah,
some
cutting the-
letters yesterday saying that they're not going to, like, they want to basically all the departments analyze and see who could be cut.
Yeah.
Because they don't have money to handle those obligations. So it's
That is
interesting. I mean,
crazy
it's evolving. It's kind of evolving. It might be, some analysts say it might be different this time. The market so far is not reflecting it, and we follow the market.
Right.
So basically, let me really fast show the screeners. Do we have the screeners on? Let's see, because there is not like the market is rebounding. There is not too much price action going on. So I'm going to concentrate on more on the robots today, give a bit more overview. Today is going to be a short show, so since the market is slow and I don't see too many trades. So basically, we're going to create the dashboards and the updated dashboards and updated analysis. But pretty much we've been delaying it since I was hoping to see some turnover. I was hoping to see some clarity, perhaps today after the shutdown. So basically nothing changed. Nothing changed. The market is generally in pretty negative mode. Pretty much everything is in a downtrend. We have Bitcoin and Tron performing stronger than other symbols. One thing that I want to note, that we do have an early indication, but it's remained like that since yesterday, and that's why I was waiting for some initial additional confirmation that on the oscillators, which should be like kind of like a forward-looking indicator, it should show us a downturn ahead of time and also a turn to the upside ahead of time. So while overall rating, which combines 1, 2, 3, 4, 5, 6, 7 different indicators, while overall ratings still remains neutral to bearish, we have an early divergence signal, H0 signal, showing an upside momentum. So the prices, that shows to us that price is at least stabilized. And we could see it on the price section. We could see a great level of stabilization. We could see that Bitcoin is kind of outperforming with that breakout over the weekend and over the last couple days price action. Similar picture on Ethereum, Tron, Solana, great rebounds from the 190 zone. We were actually calling it for the buy. We actually entered the transaction on Friday, if you remember, because we thought that 190 is a strong level where the price is likely to rebound from, and we saw that strong movement from that zone on Friday, which is confirmed by current price action. So Solana, like remember we talked about it several shows ago as well. We predicted that type of correction. Yeah, I was hoping for a more healthier correction where the lower lows would not be created. But as we see here, it actually broke down that trend. Like we were expecting it to stay somewhere around this level, around 215,
Yeah.
220 zone.
We did see that. Oh,
But it did go deeper. It did go deeper, which is normal for Solana. It's completely normal because it's a highly volatile one, and it moves in the unpredictable things like that. But I mean, it created a better entry. It created a better entry. We had to revise the entry that we suggested before, but it created a great entry. I actually posted some analysis on Twitter about how we played that trade. So basically, the idea that this is also a good level. Like this still remains to be a good level. Just before we were planning to buy it on the rebounds from that level, but now we're buying the same level. It still remains into the play because it's still a good strong level. It would have been way more unhealthy if we broke the regression channel. So the next move down below 170, that would have been
yeah.
highly unhealthy move. But new low lows is also not so healthy. So at the
Yeah.
end of the day, I like that rebounds. I like that candle. So I
Yeah,
still
I like
remain
that it yeah.
strong on Solana. XRP, nothing really to talk about. BNB, Binance, very strong rebound from the Ichimoku
Yeah, everything
lines,
just
actually.
came crashing down for a second there.
Yes, it was, and we talked about it on Friday. It was basically just to keep you updated on that. Like the major cause for that drawdown, there was like two major causes for the drawdown. One was the main one, and the second one was like secondary one. So number one cause, and we actually should have noted it. We kind of like missed on that on whatever on the previous podcast. We should have like brought it to everyone's attention. And it's again, sometimes it's very easy to look in the rear view mirror.
Yeah.
Like you know everything, and like it looks like you have a crystal ball, but like it's already too late because you already crashed into something. So like it's backward looking in trading is always much easier than forward looking. And in everything in life, I guess,
Right,
is kind
right,
of the
right.
same. But the major two causes is actually cause number one. On Thursday, we had an announcement of GDP, which is actually came hotter than expected. Like, which is a great news. The economy is
Doing better.
growing.
Yeah.
Like, the economy is not in recession, what everyone is talking about. But since the Fed have a dual mandate, part of which is employment, part of which is inflation, and higher GDP usually means higher inflation. That's why market bugged out, and crypto especially bugged out, because there was a probability, like that increased the
Yeah, there's a lot of
probability that the Feds won't decrease the rates again, as they basically guided in the previous meeting. So that's a like, I mean, it happens in trading, and that's why sometimes it's kind of tricky to interpret the good news, because it's not occasional. It happens pretty often in trading that the good news is actually means the bad news. It's ridiculous, but that's how it is.
there's so
That's
many
how market.
factors that go into it though, so That's why.
But it's still hard. Like, I mean, it's hard to go against the logic because, like, usually, like, before, like, I mean, until I saw that data, and it wasn't always like that. It wasn't always like that. But with GDP right now and with Feds involved in that money printing cycle and
Yeah.
everything, GDP, like, over the past, like, let's say, like, over a decade, was always like that. So the good growth in GDP, which is supposed to be
Be
good
a
for the
good thing.
market because the stock market is growing, the companies making more revenues and
But
things
it's
like
a
that.
sign that inflation
The printer
is
is not going to work. The printer
exactly.
is going to stop.
Fuck. And they're not gonna decrease those interest rates
But that was
because they don't have to right now.
yes, exactly, because the economy is growing anyway. So that was one big part. Another big part was the fact that the market got a bit ahead of itself. There is a indicator. I don't have it right now ready, and we don't have enough time to bring it up today. But basically, there is an indicator that shows amount of leverage in the system,
Mm-hmm.
open interest. So where there is an indicator where, like, for both, for the Bitcoin, Ethereum, for altcoins, for different coins, etc. So basically, when this indicator crosses and the Bitcoin, when the leverage in altcoins is bigger than the leverage in Bitcoin, always results in a leverage flush and correction
Right.
historically. There is
Right.
a quant data proving that concept. I'll be more prepared for our next show, and I'll show that concept because we're actually going to add that indicator to our dashboard. I want really shortly introduce, first of all, let me show really fast. We did some major updates to our website, and it's now should be launched. Let me check. So we did some major updates to the website. We continue working on it, but now you could basically see the some of the strategies time. Like we're updating the results real time. So like you could kind of even follow some of the trades from the website without subscriptions or anything, because on the top models you see what trades are open right now and what we're trading right now. So we're working on improving the site, making it more useful. For now, most
Nice
of the
picture.
oh, thank you. Most of the content now, shout out to Pedro. So most of the content right now you could get from the YouTube, from the Telegram group, and from the Twitter, as well as from the Substack. But we're going to be adding more and more substance. So with subscriptions, you would be able to follow. You would be actually able to apply some of the models yourself. So we're working on the back end. Hopefully within the next couple months, we'll get the back end of it working as well. So you could actually plug into the some of the models that we trade, that you like, and basically copy trade them
Testing some new ones too.
on your accounts, basically.
Yeah.
For now, we're also working on the also, I wanted to show you the dashboards that we're working on. That will be also part of the site, which would help. Like, first of all, just to give you a perspective of how many different things going into analysis. So, like that type of the dashboards we're working on right now. We're going
Wow.
to actually make it available on a subscription basis. It's pretty expensive to get these boards together. Not so expensive on the technical side. On the technical side, not too hard to pull like 50, 100 indicators together. But since it's different sources of information, just to build an API system and to get that data, we need to invest like several $1,000s just to basically have all the subscriptions and everything
Oh, okay.
to be able to feed that data on a regular basis, let's say on a
Uh-huh.
daily basis. So that will be like kind of like overall. Basically, we have like four major analysis: macro, on-chain data, derivatives, and technical. And like all those are different on the scale on the scale 0 to 100, basically. That's the evaluating the current stand. So basically, if it's like below 33, it's like extreme bearish. If it's above 66, it's bullish. I usually say like if it's above 80, that's like strong bullish, but that might be already too late to enter. And then we also have a neutral zone from 33 to 66, kind of like unknown zone. And then we have like all the breakdown. The one that I want to talk about a bit today at the end is fear greed index. You familiar with it at all? Like you heard about it
I've
before?
heard about it. I've heard about it.
I mean, it's a great indicator, very specific to crypto. The one that used
It's what
to
everything is based on, fear and greed.
Yes, for sure. For some reason, it doesn't have such a. It's a great indicator. It's basically a sentiment indicator. It's overall sentiment indicator. But again, we have a pretty interesting model. Like we developed it. Actually, I developed it around like 3 years ago when I just like got involved with crypto. It's a very simple model. It's again same with the GDP. It's an opposite model.
Yeah, exactly.
So it's
People
basically
are fearful, you buy in. People
yeah,
are being greedy. It's time to probably get out.
exactly. So it's a very simple concept was taken into account. But now this concept is actually gaining momentum because a bunch of quant traders, like we haven't announced it or like we haven't published any strategies on it. But now I see that a bunch of people are actually trading that strategy because a lot of people realize that this simple strategy allows to make good money, good returns. So,
Right.
I mean, when you combine those indicators, obviously you get even like better entries and
Better,
exit.
yeah.
But it just shows that even simple strategies could yield pretty good returns. I also have more data prepared for the next meeting to better explore and show you on the data points what
Yeah.
results we are yielding. But it's very amazing results. It's amazing results. Very simple strategy. And by the way, we just had a fear on Thursday. This price action, it actually resulted in the first time in a while where fear went down, but it only stayed there for 1 day, basically. It
Based on what
wasn't a
happened in
fear,
crypto.
yeah. Yeah, and then
That
it
makes
went
sense.
back up,
Well, it was a
basically.
great time to buy in.
Yes,
I
yes,
didn't,
yes.
but
Yes, unfortunately you were too busy because
yeah,
it's easy to
it's too much
convince you.
bullshit
If
to
you
do.
were on the show last time, you
Exactly.
probably would
I'd
have
have been
bought
like,
some.
buy some. I didn't even fucking. I was just like, I'm just gonna let it come back.
So yeah,
I'm still looking at 300 for Solana, anyways. To be
good. You
honest.
see, like a lot of indicators goes into analysis, and then there is like summary metrics. So next
good.
time we'll have it like already more time. We'll spend more time on it
We'll go through
to
it
show
more.
you,
Yeah.
yeah, how we could use it.
This is good. Um. Okay. Until next time, guys. We'll be right back after these messages.
Thank you.
Um.
Bye.